What is going on YouTube? It's Brendan from Market Makers. Guys, my editor Lee is out on a date with his girlfriend at a birthday party. So notice there's no intro. There's no cute edits in this, guys. We're going to go old school style on this video. I wasn't planning on making a video today. I kind of wrapped up the week in yesterday's video, but obviously Bitcoin dumped and a lot of people were messaging in the video description and DMs in the Discord saying, please make a video. I was going to wait until my Sunday kickoff video, but because I love you guys, I'm postponing my Friday night plans to get this video out, and then I got to get dressed and get out and do something social. But let's talk about what's happening in the markets. Guys, this video is going to be brought to you by our two sponsors, BITGET for crypto, SimpleFX to trade the equities, commodities, Forex space. Check them out in the video description with our exclusive bonuses. It helps support this channel. And if you want to trade with us, Telegram info at half off is in the video description, as well as the join button underneath this video integrated into YouTube for our Discord. Let's go ahead and talk about this. Guys, we got to talk about the DXY first. DXY, remember I had this area circled off. Very important to understand the market cycle that we're in. You'll hear people talk about the debt market. You'll hear people talk about a new bull run or a bear market rally. I do all these things as well, but the master cycle is the market cycle that we are in. When you are in this market cycle of the Fed increasing rates, you're going to strengthen the DXY. This is important to note because it weakens metals. It weakens cryptos. It weakens the equities market, and the market totally misread what the Fed said. And actually, that was intentional by the Fed. Okay, that was Powell wanting to appear dovish, and the market did his bidding. The experts on TV, guys like Tom Lee, who says this looks like a new bull market forming, the experts on TV are going to be proved wrong yet again, like they were in 08, like they were in .com, because they are bull market geniuses. That's what the majority of this space is. In a bull market, buy the dip, buy the dip. See, told you, buy the dip. When you are exiting a bull market, entering a bear market, they are totally lost. But unfortunately, majority of retail is going to follow the bull market geniuses, okay? So we have the DXY pumping up like predicted. In my previous video, look at this guy. That guy's pretty attractive, huh? Look at this guy. But at my previous video, I drew this exact quadrant that the DXY would pump up to, right? Earlier this week, Monday, Tuesday. And when you look at what it's doing, guys, I'm showing you this because it explains what's happening in the markets, okay? You pumped right up to the 1618. .com bust, we went up to 1.20 or just slightly higher than that for the equities bubble. This is an equities bubble. This is a real estate bubble. This is a bond bubble. This is a multi-pronged bubble, the first one in U.S. history, but you're going back up. Don't let the fact that price moves in waves, including the DXY, fake you out. As long as the Fed is raising rates, DXY is getting stronger. A lot of the things you trade will get weaker. That's what you need to know. Key takeaway, okay? Let's bounce over to Bitcoin, guys. Bitcoin on the weekly time frame. I'm going to start here first. Weekly time frame. You fell through your 200 moving average you're using as support. Notice no wick yet on this candle. You are dumping hard, okay? Your 300 moving average is beneath you. At some point, you will be testing this for support, and it's moving up towards that 17.5 level. We're going to zoom into the smaller time frames to see where Bitcoin's going. Notice your 45 angles from the all-time high and the pandemic low are crisscrossing, and this is going to kick you down, guys. And again, if you watch this channel, I still see people ask me what's my ultimate Bitcoin prediction. On a trend-based fib wave projection here, you get to 10,591. I've said repeatedly, you're going back to your pandemic lows. I can show you this with Dow theory very quickly. Let me go ahead and do this. So we take a basic fib retracement here. Let's grab a fib retracement, go from where this started off, right? The pandemic low, the Fed injecting trillions of dollars, money flowing in the risk assets, and we pull this out, guys. A 100% retracement, again, a complete market cycle, a 100% retracement, the natural halving and doubling in the marketplace, gets you down to 3,800, 3,858. Again, that would be the Dow theory, Gann theory of the natural halving and doubling in the marketplace. Okay, this is a 100% retracement from the move. And you can see this on the impulse as well on the way up. Okay, so if we grab that pandemic pandemic low to your first all-time high. You can see this, the 50% retracement from this move. So your impulse up, your retracement down. Majority of these candles stayed above the 50. Obviously in Fibonacci, you're looking at 618, but the majority of these candles stayed above the 50 for weeks and weeks and weeks until these last two came down, gave you a spring back up. You see that? And this gave you your next move up. And you can do this. Dow theory, you know, Charles Dow was a fascinating individual, obviously founded the Wall Street Journal. He never actually wrote a book. He was always urged by his colleagues to write books. I've collected all of his articles over the years that he's ever written. So the books that you see that are called Dow theory, he never labeled his writings Dow theory. That was basically put together by Robert Ray, I think Bishop after him or during the same time frame. But that was a collection of select articles to give you his theory on the market movements. But Dow always said the 50% retracement is the key retracement in the market due to natural halving and doubling. Again, natural law. Dow was the first person to talk about price moving like waves. Gann picked up on this. Gann got really heavy into geometric divisions in the marketplace, angle trading, okay? Geometric trading in the marketplace. He also tied that to different astrological movements in the marketplace. So Gann is really heady stuff. Dow's not as heavy, but it is some good reading. If you ever want to learn about Dow theory, read his articles. Again, if you look at this, guys, just to show you some more Dow here. So the beginning of this move from your previous all-time high to that swing low here at the market low prior to your next all-time high. What is this? Another 100% retracement in the move. You see that? So you have a 100% retracement back up to make your second peak. Is it perfect? No. You got you know, big wick above it, came back down, settled right back around the 100% retracement. So this is just going to keep repeating in the marketplace, halving and doubling in the market, and that 100% retracement gets you back to 3,800, which is where I think everything's going, is those pandemic lows, okay? So that's just how I'm basing it. You can think it's crazy. I totally understand, and it does not make me mad if you guys say that's crazy, Bitcoin will never go below 12. Bitcoin won't go below 10. But what I can tell you from only having been in the crypto space for just over, what, a year and a half now, I always heard Bitcoin can never lose 28. Bitcoin can never lose the previous all-time high from the previous cycle because it's never done that before, and certainly it's broken all of these rules. The cycle, the market cycle is what matters. Remove the like the cultish mentality these spaces have when you are trading, guys. Look at everything without bias and you will see the market cycle is going to predict where the price goes. And I'm telling you, when Bitcoin comes down to test 17.5, that is a key area to watch in the marketplace, okay? Let's go ahead and go to the daily. Now, our volatility compression pattern, this really, pissed me off because this was such a beautiful bullish pattern. Again, a play on a cup and handle. We had the compression, we had the tightening of the waves, and of course, I did this via trigger order. Ideally, you want to trade this on a breakout, which is much easier to do in equities because they have set trading hours. But with Bitcoin, you want it to be able to get this on a breakout. I did a trigger order intentionally several $100s above where Bitcoin had been wicking, as to not have exactly happen what happened, which is wick me and then go down, okay? And that's what it did because this is crypto and that's part of the headache of crypto. But it is what it is, guys. It's a trade. But if we look at this, looking here at the volume profile, as you can see, we don't have a lot of candles, right? Because you can pull in all these candles. Here's your previous accumulation last summer. You still have nothing. You got to go back to the beginning of the bull run. So we got to look at these current candles and trend to look at where our volume support is. And you're roughly just about coming down to the point of control here on volume. If you lose this line, guys, you have a bias to go to the 2618 here at 19,174, which will put you just slightly above the 17.5. And it looks like you may be going there potentially this weekend, trading at 20,861. Let me go ahead and turn that VPVR off so you can see this a little bit better. How did I get this projection? I showed you guys this before, but I utilized this double top structure here on the daily time frame. Let's go ahead and pull this up and look at this. All right, double top, the first peak down to the base, down to the second peak. You got below the 1618, you try to hold it, you fell below it, you try to fight it, got a wick above it, and you're coming back down. Solid candle body, no wick yet, okay? And again, looking at the 2618, 19,174, I think you're gonna find support between here and there, and you'll hold that and bounce around. The markets are just starting to turn down. today, and they don't trade on the weekends, guys, and the DXY won't be active either. But you know, all the other marketplaces, I showed you guys that, but the Russell, the Nasdaq, the Dow, the S&P all did this move, right? They all found their range and came up and tested their 200 or 233 or both, and then they built a shape and they started to retrace. Bitcoin never got there. It was a big disappointment with this bullish pattern with higher lows all in the range, higher highs all in the range, and it never got there. And as soon as the market showed weakness, I told you we were on a clock. As soon as the market showed weakness, which was selling off today, Bitcoin rolled down instantly, okay? Again, you have to track the other marketplaces. It's very important to understand how money flows in the market. We look at our volatility, guys. We're starting to expand a little bit here. You see the mouth opening here a little bit, but you are still heavily compressed, which is, you know, could potentially be a very dangerous thing, which means you could get a very strong impulse move down. Look at this expansion, okay? These are big drops. These are what? Some of these drops are 40, 50%. So you got to watch these drops and see what Bitcoin does here. But I want to see it find a base so then I can start looking at shorts, because you're going to have wave action. You're going to come back up, and I'm going to look for some peak resistance now that the other markets are all dumping. Look at the 8-hour candles. You see this? No wick on that candle. Bitcoin is just dumping, okay? It's just dumping. Dumping, got a nice demand wick, dumped. Came back up, dumped. So this is what it's doing, and it's below all of the key moving averages. Going to the 4-hour time frame, absolutely huge to lose the 200, 233. Why? Because it's a 4-hour time frame, and in times of price declination, I've made whole videos on the 4-hour time frame for Bitcoin. This is going to be your ceiling, okay? Primary downtrend, 200, hit it, drop. Got above it here, drop, okay? Over and over again in a primary downtrend, you will find these levels of resistance, and you can find them, and every time you touch them, you build some shapes, might get above them a little bit, and you fall back down, guys. Just continual price declination. So watch the 4-hour 200, 233. When Bitcoin does find a resting place, because it will stop somewhere, these will descend, okay? These will start descending, and remember, price will always rise to resistance or fall to support. That's the two options that it has to do, okay? So Bitcoin currently is still descending. We'll see where it bottoms out at. It's gonna give us some type of Wyckoff structure, and then we're gonna be looking as these markets, if they do continue to descend, we're gonna look at these markets and find some areas of confluence to build more shorts. Ethereum on the daily, as you can see, Bitcoin's dropping, Ethereum's dropping, violating your trading range. You defeated the whole Wyckoff structure here on the bullish structure that you built here on Ethereum. You lost your cup. Remember, we talked about you can hold a cup or you can fall apart, and you're falling apart. Going to the Russell, guys, these trades, I posted this trade in the Discord, posted this in the Telegram, and I talked about it with you guys here on YouTube. You can trade this on SimpleFX. This is a fantastic trade. Pumped to the 200, which Bitcoin never did. Got to the 1618, chameleon pattern in effect. Price is dropping. Where will it find support? Probably come down to at least maybe this 150 at 1911 and start bouncing around. That's if it doesn't come back up and look to make some type of double top structure, because you can see oftentimes you get a drop and then a price move back up. This is how double tops form, okay? So you can get this structure over and over again here in trend. So watching to see if this plays out that way, and looking at the Dow, again, got to the 1618, got to the 200, turning down. Could it hold this area? Sure. Can it come back up and make a double top? Yes, it can. Do I see new bull markets with the economic conditions that I described earlier? No, I do not, guys. But that's just my opinion, and people can have different opinions. S&P got to the 200, again, fell below the 168, turned down. And I'm still looking, just like I said, you can come back up and get these structures, get the double top, or you could just start rolling down like that. So we'll see how this plays out. Nasdaq, same thing. Pumped up, lost the 1618, resting on the 150. Maybe the Nasdaq can come back up, because the Nasdaq, you got a chameleon here too, but you got a left shoulder, you got a head. If you come back up, print some candles, you have a right shoulder, and then you can fall down again, okay? All of these will come back down because the marketplace has over-exaggerated what the Fed is going to do. This pivot narrative that has come through the marketplace is totally incorrect, and the markets will not rise while the Fed raises rates, while the cost of doing business continues to soar, and while inflation, because remember last time we had 8.5 inflation, the markets tanked. Okay, now they did face ripper rallies. All this was overdone. It's all going to come back to some level of support, ping pong around, and I'm going to look to see if it continues to move down. Looking at stocks 50 European, okay, we lost the 45, got up to the 233, and we're falling as well. And let's go ahead and bounce over to oil. Again, look at that trend line. Oil hit the trend line, fell back down, holding the 300 right here. That's what oil is doing. Oil supplies are the lowest they've been since 1985, guys. So again, winter is coming. I think oil will have another leg. Gold, guys, if the dollar rises, gold will not rise. And this is why you have this peak up here all the way at 2070, and you were trading at 1747. Okay, commodities like oil, they will spike. These are cyclical trades, and going into a recession, where will this get strong? Again, when the Fed finally does pause and or pivot, and we still have inflation present, gold will take off. Until then, declination is in line with what's happening with the dollar getting stronger, okay? Silver, look at this, same thing. You're gonna come back down and retest these lows, okay? Silver got all the way up. Where did this get to? Because this got really high. I guess is that the high up here? Silver got to 26, did it get higher than that? It did get higher than that. Oh yeah, it got higher than that. All right, but silver got all the way up in recent trend to 26 and then declined. And this is just going down, and you're at 19 right now, guys. So this is something, you know, these commodities will have their heyday, but it is too soon to be super excited about gold and silver. They have more to move down while this guy continues to move up, okay? This is driving the direction of the market. The dollar is the prettiest girl at the ugly dance, and this is where money and inflows will continue to go. And as long as that continues to happen and the Fed gives you that paper tiger strength of rate hikes, even though the economy is contracting with record high inflation, the dollar will appear strong until the Fed pivots and we still have inflation. Then this thing is gonna tank, and then your commodities could soar. So that's what we're gonna look for, guys. I hope you guys have a fantastic Friday. Enjoy your weekend. Sunday kickoff video will be coming Sunday as usual, and I'm glad to get this video out for you guys. I'll answer your comments and stuff while I'm out if you go ahead and have any questions. Talk to you guys Sunday. Take care, everybody.